What's going on, everybody? It's November 3rd, 2022, the log episode number 44. And today we're going to cover US 500, what happened, and what I believe is going to play out potentially tomorrow and then following into next week. So, in regards to last night and even this morning, I was talking about how we could potentially form a bearish fair value gap, and that was going to be, for me, the catalyst to why price was going to potentially move lower tomorrow. I don't see a reason, obviously, for us to continue higher after FOMC. I think it set the tone for us and set the narrative for us to continue lower. Now, I want to take your attention out to the weekly time frame because, again, this is the main narrative. This is why price is doing what it's doing. Even the monthly time frame, if you look at this bearish order block, we closed underneath and then we returned back up into it. We barely got above the previous month high there, so just returned back into that fair value gap, something to note. And then the weekly time frame returned back into the bearish order block. So that's giving us a good confirmation, especially when the weekly dealing range, which is the daily as well, but it returned into a premium, got above equilibrium and retraced back into a premium bearish order block. So with that in mind, you go down to a daily time frame, you see buy stops have been ran. This gap, I'm happy that it stayed open. Okay, when you see a fair value gap stay open, it acts as a breakaway gap, which means price is probably extremely bearish. And I like that it stayed open. I like that we just cascaded lower after running buy stops. So you have buy stops being ran there, and then once more above the buy side liquidity there. We displaced lower, closed underneath this low today. So on lower time frames, to me, that's a market structure shift. And now we can start looking for price to return back up into a premium and pair that with premium PD arrays. So we have the fair value gap resting here. This up close candle here is going to be your bearish order block. Lower time frames, you have a bearish breaker as well. Okay, the bearish breaker pattern is there. So I think there's a lot of good confirmations for us to go lower. Now, our first objective is going to be the sell side liquidity resting underneath that low there at 36.33 or 32, and then eventually 34.91. I think there's some nice relative equal lows here. On the 4-hour, 1-hour, you can see resting at 35.80. So those are my sell side liquidity objectives. I would really like for price to retrace up into here on NFP, take out the previous day high, and then we could see lower prices. May not happen tomorrow, but it could set up potentially next week for us to really move lower, which would be amazing. Going into the 4-hour time frame, we ran out buy stops. So this is just the YouTube model on a higher time frame. Okay, you're running out buy stops. We already used this fair value gap there, annotated on the FOMC. Displaced lower, we had a market structure shift underneath the low there, so we closed underneath it. I was annotating this morning to pay attention to this fair value gap, but as soon as we closed underneath it, I really didn't like anything to go long or short. And now we have a nice fair value gap from this low to that high there. And if you look a little bit closer, you have a nice balanced price range. So this is all coupled with the daily time frame fair value gap, and that sets up a high probability for me in regards to the daily time frame and the narrative and what we're looking for overall. So I would like for price to retrace back up into here. That would be ultimately the best option. I'm not saying it has to or needs to or will, but that would set up the scenario for us to go short. Now, for me, knowing the YouTube model, let's say price retraces back up into here. You can start looking on lower time frames for that displacement lower, that return back into a premium relative to the smaller time frames, find a fair value gap in there, and then go short. That's how I like to play these type of moves out. Even though I'm quite confident in this area, I still like to have that bit of extra confirmation, that bit of, I guess, waiting for my rules, waiting for my discipline to play out. Okay, so if we dig down into the 1 hour time frame, again, we displaced lower underneath the low there. We have the fair value gap from this low to that high. We dug up a little into it today or last night and then displaced lower. There's a nice pool of buy side liquidity resting above the high there and the highs there. So if we could get something that matches up with the 4 hour and the daily time frame price to retrace back up into there, that would be amazing. 30-minute time frame, nice fair value gap resting right there. I didn't even annotate it. So you have a couple levels of buy side liquidity resting there and resting here. So what we'd be looking for in order for us to go short is a retracement back up into that area. Okay. Looking at the 15-minute, same thing, fair value gap there. Actually take from that low to that high there. So it all is all residing inside of the same area that the daily time frame resides in, which I posted in Telegram. That creates a high probability when you have a daily time frame or a weekly time frame PD array, and then you can start kind of going down to lower time frames and narrowing it down. That creates very high probability area for you to start looking to place a trade because it's off the backbone of a higher time frame context. And now we know the daily time frame is probably bearish. So once you start adding these things up, that creates a high probability environment, right? So that's how I like to find my trades and my setups and find that narrative off the backbone of the higher time frame context. So I wanted to talk about today what happened in price action. It wasn't too meaningful, which again, I've told you guys all week, stay out of the market. There's no reason to be trading. And now that doesn't mean that there isn't trade opportunities, but it's just low probability to me. And if my mentor, ICT, tells me not to trade these type of days, these type of weeks, I'm going to listen to the man. I'm not going to try to ego my way through it. I've done it before, I've lost. So I'm going to listen to a person who has 30 plus years experience and has been mentoring me, and I'm going to listen to him. Now, some people have, their own trading criteria and their own risk. So by all means, do what you want. But I think this creates a good, consistent equity curve if you're following certain rules and certain days not to trade. Now, looking at the 1 minute time frame, you have a market maker buy model here. Okay. So let me actually go to the futures contract because I think it gives a little bit better view of a price. Where are we at here? So this was during the New York session there. Let me change this real quick. So the open was right here at 8:30 my time. We took out buy side liquidity. So relative equal highs resting there. Took out buy side liquidity, retraced back into a reclaimed fair value gap. It's not the highest probability, but I'm just annotating what happened. We displaced lower. And then I talked about how market maker buy models or sell models mirror each other. So what that means is the left side of the curve should mirror the right side of the curve. The right side of the curve should mirror the left side of the curve, depending on you're using a market maker buy model or a sell model. So old selling creates new buying. Old buying creates new selling. So if you look on the left side of the curve of the market maker buy model, you can start to pair up old selling. So if you look at other PD arrays, such as this fair value gap here, you can start to pair up in areas. And I'm not saying to use this side of the curve, but it's a good confirmation. Even some of these up close candles are a good confirmation. But the biggest thing is watching this here. So price displaced higher, leaving a fair value gap there. And up until that point, there was nothing to go long off of. There was no fair value gap. There was nothing in here for us to go long. So we have a market structure shift above that high there. You have buy side liquidity resting above the high here from the open. And if you take your dealing range low to dealing range high, price returns into a discount. So once it reaches underneath equilibrium, that is okay to go long. And your stop would be beneath either the fair value gap or the dealing range low there. And then you'd be targeting the buy side liquidity and maybe taking partials, moving stops to break even. It's not a super high probability or a beautiful model, but it does show that even on a 1 minute time frame, this stuff works. It's there. Like people that say the 1 minute or lower or 2, 3, 4, 5 doesn't work, then they obviously don't know what they're doing, because you can see clearly here that the algorithm works on every single time frame. So you just have to understand from a higher time frame perspective really where you're at and then work your way down. And if you can't tell on a higher time frame where you're going, then that kind of creates low probability for me. So now that we know the daily time frame, we know the narrative, things become a lot more clear. Do you see how last week or even the beginning of the week, it was a little unclear for me because I couldn't tell where price wanted to go. I couldn't tell if we wanted to retrace into this fair value gap or go lower. And now that prices gave us more information, now we can start looking for short setups. And that's really all you should be looking for. Okay, so that's going to be it for me tonight. I will update in the morning. NFP, I'm not trading it. I please advise you not to trade it and just observe price, put it away in your study logs, and that way you can save it for next time. And that'll be a wrap for the week. So until tomorrow, good luck and good trading, everybody.